Hello everyone. I hope you're doing good, mentally and physically fit and fine. So, friends, let's start today's session. And we are targeting chapter number 16, then 17, and then 18. Okay, let's target. Let's see how much we are able to complete. So, we are discussing internal audit. We have already discussed section 138, very interesting, pretty interesting. A lot of interesting cases can happen on 138, section 138. We have seen that. Now, the XYZ Limited has appointed Mr. A to conduct their internal audit for a new financial year. The audit committee requested Mr. A to present their internal audit plan for the next financial year. What approach would Mr. A follow to prepare internal audit plan for the next year? Okay. So the question is on internal audit plan. Internal audit plan. So let's see what they have done in the module. Just a minute, guys. So now institute does few things like this. There is no specific theory on this aspect in our module, but they have asked question and they have answered it also. What approach? So what will the approach? So when you are, they talk about plan, but they don't talk about it in detail. So they are saying that if you want to plan the internal audit, what approach would you follow? Basically, how would you do planning? The internal audit should, let's see, guys. The internal auditor should, in consultation with those charged with governance, including the audit committee, develop and document a plan for each internal audit engagement to help him conduct the engagement in efficient and effective manner. They're saying that, okay, let's sit with audit committee, and if there's no audit committee, sit with board of directors, and let's understand what are their expectations, and let's decide the internal audit plan. What are the different departments and the processes we are going to cover? Let's discuss that. Let's understand that. Internal audit plan should be developed in such a manner that all the business processes covering both financial as well as operational activities are reviewed by the internal audit function within a defined time cycle. So they say that it will be a good plan if we cover all the business processes, all important processes, their operational aspect also and their financial aspect also. So we can say that it should cover purchases, it should cover production, it should cover sales, it should cover recovery, it should cover finance, it should cover accounting. All the important processes should be covered. Also ensuring that appropriate consideration is made and adequate balance is ensured to the following. Further, they are saying that we cannot have same treatment to each and every process. So we need to keep in mind the risk underlying the business process. Definitely, the business process having more risk. So if we feel that there's more risk in purchases, we'll be paying more attention to the purchases and so on. Value that internal can provide to the organization. So you should also see what is your expertise. What is your expertise, in which area you can give a lot of value addition, a lot of good things. So you should try to cover those areas. Suppose you are you're super when it comes to sales. You're expert in sales. You can give a lot of input in sales. You can improve the sales process. So you should keep that in mind. effort involved in conducting the internal audit for a particular business process. Also, the efforts required, how much time will be required, because we have limited time. So we need to plan accordingly. That if any process is taking a lot of time, we'll have to cut it down somehow and give limited time. Risk appetite of the organization. All the organizations have different risk appetite. Some are ready to take a lot of risk. They're not worried. They want growth, they want progress, and so on. So accordingly, if they can manage the risk, then we don't need to worry. We need to then in that manner uh, we can always we can always say that okay, we have to reduce risk to only to we need to give suggestion to reduce risk to their acceptable level, and their acceptable level is very high. Cover all auditable areas within the defined time range. Okay, so when you are planning, you should sit with Ravi. If you're doing internal audit planning, okay, if you're doing internal audit planning, you should sit with Ravi, and you'll be major business processes have different type level of risk. So accordingly, the kind of efforts you're going to give to each and every process is going to change. Then risk appetite of the organization is different. So accordingly, because people have higher risk appetite, then in that case, you don't need to go in a lot of detail and put a lot of efforts. You need to bring risk to the acceptable level, whatever is their acceptable level. If they have good risk appetite, we should keep that in mind in planning, and accordingly we can afford to have more risk in certain areas. Then cover all auditable areas. Coverage should be more and more. More you cover things, more value addition you can do for organization. Then value, as per your expertise, cover those areas in much detail where you can contribute more. And then always keep in mind efforts required for conducting internal audit for a particular business process. That's very important. You should keep that in mind, because you're filling up the plan. You cannot cross the time budget and the cost budget. You should keep that in mind. So accordingly, you will decrease few things, you will optimize few things, you have to rely on others on few things, and so on. You may use previous year audit evidence. So if you are planning internal audit, sit with Ravi. That's the shortcut. Now next is reporting structure. Let's understand this, guys. Chief internal auditor to lead internal audit function, the person is appointed. The managing director of the company has asked HR head to define the reporting structure of the internal auditor. What will be the reporting structure, so that he can discharge the duties objectively? Suggest the ideal reporting structure for the chief internal auditor that HR head may possess to the managing director. Now, that's very interesting. It is not structure of the report. So just like organization structure, very unique question study material, study material, that now a person is appointed as internal auditor, and HR head is supposed to define the reporting structure, organization structure, like to whom internal auditor should report. Okay, to whom internal auditor should report. We have already studied in SA 610 about it, that if you want internal auditor to work with objectivity in unbiased manner, if you want him to work in unbiased manner without any influence and without any conflict of interest, president report to CEO, report to MD, CEO or MD, or report directly to audit committee. And for most suitable option in light of the relevant provisions and guidance and overall governance of the organization, HR head also need to evaluate different options for his administrative reporting and various options for functional reporting of chief internal auditor. The possible options to be considered and evaluated include board of directors. Reporting can be to board of directors, to audit committee, or to managing director or CEO or chief financial officer. As per section 138 of Companies Act, the internal auditor shall be either chartered accountant or cost accountant, okay, as we know that, whether in practice or not, or as such professional as may be decided by board of directors to conduct internal audit of functions and activities of the company. As per revised definition, the term internal audit as per provides independent assurance on the effectiveness of internal control and risk management process to enhance governance and achieve organizational objectives. Yeah, those are the three things: to help in governance, to help in risk management, to help in evaluating internal controls. These are the three broad areas internal audit works with. So they are giving reference of 138, they are giving reference of definition, shall be free from any undue influence which force him to deviate from truth. This independence shall not only be in mind but also in appearance. Also, the internal auditors shall resist from undue pressure or interference in establishing scope of the assignment or manner in which they are conducted and reported in case these deviate from set objectives. As per requirements, okay, as per requirement of above said provision, chief auditor need to be independent of the operational activities and report to audit committee board of directors to enjoy its true status of independent auditor. He may administratively report to CEO or managing director for his administrative report purpose for any other similar authority till the time it is approved by board of directors and it does not impact his independence to able to perform his duties and report to audit committee and board of directors independently. Okay guys, they're talking about two types of reporting: administrative reporting and functional reporting. Okay, see, for performing internal audit, uh, internal auditor is going to need a lot of resources. He's going to need staff. He's going to need space. He's going to need machines, softwares, okay, lot of accesses. So for that he need to go to people and ask for things. So for administrative purpose, to whom he should go and ask for things, that he identifies issues and problems and makes his report, to whom he should make his report. So for the resources, he is supposed to go for administrative reporting, and for sending and discussing the internal audit issues, there should be functional reporting. And they are saying at the end that for functional reporting, it will be good if they reports to audit committee or to board of directors, and for administrative purpose to CEO or managing director or any other similar authority. Okay, so let's freeze, guys. It's a wonderful question. It's altogether a unique question. There is no such discussion. There is no such discussion in the module. In module, there is no such discussion, but then there is a question about it. Okay, so if we crystallize, so if you see that this paragraph is all about definition. This paragraph is section 138. This paragraph talks about admin and functional reporting. This paragraph talks about that free from undue influence. He should have liberty to function independently, and finally, conclusion, about functional reporting to audit committee and or BOD and admin reporting to MD and CEO. So if you want to draft answer, ideally what I feel you can, if you want to draft answer, you can go with applicability. That it is, you can go say that section 138 talks about applicability of internal audit and who can be internal audit and who appoints, give a rough overview, give definition of internal audit, and then you you talk about types of reporting. You talk about types of reporting, that is administrative reporting and functional reporting. Then you talk about objective. Objective is to keep him away from undue influence, ensure that he is not under any influence. Objective is to keep him independent. Okay. Then you discuss the case, and finally you give conclusion. Simply applicability as per 138 definition. There are two types of reporting. Objective is to keep him free from undue influence, keep him independent, so that he can function without any pressure. He can go and evaluate what the issues, problems, and give genuine suggestion and improve the company overall. Objective, case discussion, and then the conclusion about whom to go for functional reporting and whom to go for administrative reporting. All together a different flavor, guys. All together a different flavor. Now, evaluation of internal audit function. Guys, we have already seen this. Evaluation of internal audit function. They have given their own theory, but then I feel we should keep following SA 610. 610080. We have already seen that's the concept number, that if you want to evaluate internal audit function, we focus on technical competence. What is the technical competence of the person? How knowledgeable, skillful, experienced the person is. About the businesses, about the industry, how knowledgeable the person is, about the systems, how knowledgeable the person is, what is the experience, whether he has worked in such a level, such kind of softwares and setup. You should see his competence. Then next we should see is objectivity. Objectivity, will he be able to work without in unbiased manner, without any undue influence, with a conflict of interest. So we have to see his status in the organization and policies. There should not be any kind of restriction. There should be a lot of freedom. He should be given freedom to work independently, to decide how to check particular areas, how much resources to deploy, when to make report, how to make report, what should be format. A lot of freedom should be given. Then only he will be able to work with objectivity in unbiased manner. And lastly, he should have systematic and disciplined approach of working. So when you talk about the status, this point is already covered in objectivity. See, we would like to stick to the answer, stick to the flow and the answer which is given in 610. When we talk about objectivity, we automatically talk about status. When you talk about objectivity, we talk about the freedom and the scope. There should be freedom, scope. He should be able to cover things as he wants. Should be able to check things as he wants. Time and procedures and resources. Then we have talked about technical competence, and then we talked about systematic and disciplined approach, and that will mean due professional care. So we have covered all these points, guys. No need to remember it in a different fashion. We have already seen 610. So stick to that. Talk about technical competence, 2-3 lines. You talk about objectivity. In that you talk about objectivity. You talk about the status, you talk about the policies and procedures, the scope. That will be very important. He should not be biased, he should not be an influence, he should not be working in conflict of interest. You talk about system and discipline approach, that they have very good knowledge level, they have a systematic way of working, careful way of working. You talk about that, automatically cover these points. No need to remember it separately in any other manner. Now they have done that, but let's not, we already have a content base of SA610. Let's apply that directly. Okay. Otherwise, sometimes we'll get confused. CA Deva is internal auditor of a listed company. The company wants to make sure that it is in compliance with SEBI requirement. So it's a listed company, and they want to know whether it's compliant with SEBI requirements. At all times, it is never on the wrong side of the law. It's a law-abiding company, and they want internal auditor. It asks internal auditor to manage its compliance, tracking system, including directly corresponding with the regulator. Manage its compliance tracking system, including directly corresponding with the regulator in this regard. The profile and scope of internal audit agreed at the time of appointment included compliance with laws and regulation. The internal audit does not assume any responsibility to manage or operate the compliance of framework or to take compliance-related decisions. It is not responsibility of internal auditor to execute or resolve the compliance-related risk. Although internal audit function provides independent assurance to enhance governance, which include compliance with law regulation, it does not. They're asking internal audit that you manage a complete compliance. You ensure that entity is complying with SEBI requirements. Take that responsibility. You manage it. And whenever SEBI asks questions and there are issues and matters, you respond to it, you resolve it, and you take its risk also. If something goes wrong, you are responsible. Okay. So the answer is, I think first you should give reference of 610. You should give reference of SA610. Then you should talk about the scope of internal auditor. Internal auditor can help those charged with governance in governance issues. He can help in evaluating and improving risk management. He can help in evaluating internal control systems. And when we talk about internal control system, he can help in recall the definition of internal control. He can help in 4 things. He can help in internal controls to legal compliance of law, rules, regulation. He can help in policies and procedures, internal controls with respect to safeguarding assets, then for operational efficiency and effectiveness, internal controls for financial reporting. He can help in that. So first explain that. Then you discuss the case. Then you go for case discussion. And in that you explain case discussion, this is what they want. And finally, conclusion. Conclusion is going to be very important. The first conclusion is, he cannot manage. Internal auditor does not assume responsibility to manage or operate. He cannot manage legal function. He cannot operate legal function. Okay. He is not responsible to execute and resolve compliance matters, compliance risk. No. He is not supposed to directly engaging with the regulator. That's absolutely nonsense. He is not supposed to do that. He is an auditor. He can independent assurance to enhance governance. Okay. He can independently audit a function. He can evaluate internal controls, how good internal controls are, whether internal controls are operating effectively. Okay. He can always tell how good internal controls are. He can always tell how good internal controls are. He can give suggestions on internal controls, improve internal controls, and thereby improve governance. So it is not his responsibility. Beautiful case, lovely case, big chances that it will be targeted in exams, big chances that it will be targeted in exams, guys. Very, very important, extremely important, guys. Okay. Then independence of internal auditor. The internal auditor of the company shall be free from any undue influence, yes, which forces him to deviate from the truth, yes. He shall be independent. Is the above statement proper? And if so, how the independence of internal auditor can be established? Yeah, this is absolutely true that he should not be biased. He should not work under any influence or pressure, and there should not be conflict of interest. He should be objective. He should be objective, and if he wants to remain objective, he should be, to the extent possible and feasible, he should remain independent. Like he should avoid holding shares. He should be independent. He should not be connected. He should avoid holding shares of the company. He should avoid being head of any department. There's a conflict of interest. He should avoid financial dealings, business dealings. Uh, he should avoid agreement. He should avoid assignments where uh, relatives are involved. He should try to keep himself independent. Only when he keeps himself independent to the extent possible, he will remain objective and he will be able to deliver his audit properly. The intellect shall be free from any undue influence which forces him to deviate from the truth. This independence shall not only be in mind but also in appearance. Also, the intellect shall resist from any undue pressure or interference in establishing scope of the assignment or manner in which they are conducted and reported. He should be independent, resist undue pressure or interference. Interference in establishing scope of the assignment or the manner in which these are conducted and reported. In case these deviate from set objectives, the independence of the internal audit function and the internal auditor within the organization is a vital. The indep is vital aspect of maintaining effective corporate governance. It is important to ensure that internal audit function is free from any undue influence or pressure that may affect its ability to provide impartial and objective assessment of organization's operation, risk, and controls. Therefore, the given statement is proper. To establish the independence, the several factors need to be considered. Firstly, the overall organization structure of key persons play a crucial role. The internal auditor should be positioned in a way that allows them to operate independently and objectively. This includes having direct access to audit committee, board of directors, senior executive. Secondly, reporting line of the is an important consideration. The chief internal auditor should report to the highest level of authority within the organization. Should report to the highest level of authority within the organization, such as CEO or board of directors. These ensure that the internal auditor has the necessary authority and support to carry out its responsibility. Finally, powers and authority derived from superior further establish the independence of the internal auditor. The internal auditor should have necessary resources, budget, support to the work to conduct their work without any undue influence or pressure from senior executives or stakeholders. So, what they're saying is, first, they're saying yes, the person should be objective. Objective means unbiased, not under pressure, influence, and not under pressure or influence, and there should not be no conflict of interest. There should not be conflict of interest. And To be objective, it is important to be independent. To be independent, okay? No financial, personal, business relations. And for this, it's very important when it comes to internal auditor. What is his status? What is his status in organization? What is his status in organization? Okay, because depending on status, what is the status in the organization, to whom he reports, what is the status, to whom he reports, that's very important. If he's reporting to higher authority, he will be independent, and he will be able to behave in objective manner. He will be able to work in objective manner. Status, policies and procedures for scope. Is he given enough freedom to decide his own scope, his own procedures, how he executes them? Okay, very important factors. Policies and procedures, scope. Okay. So first thing, you explain about objective, you explain about independence, and you say that, okay, statement is all fine. Then you tell that they explain status, that is organization structure is very important, to whom he is reporting. If he's reporting to higher authorities, then he's not working under pressure of others. He will be able to report more things, report things independently, without any fear of repercussions. Organization structure. Firstly, the overall organization of key crucial role. The internal auditor should, that allows them to operate independently and objectively. Sure. Independently and objectively. Okay. He should be having a separate department. He's not working under anyone. Then he will be having a good organization structure. Then when it comes to reporting, he should be reporting to the topmost authority, so that he can report anything wrong which is going on in the organization without fear of anyone. Without fear of anyone, he can tell what wrong things are happening, who is doing what wrong, whether it is factory head or department head or anyone. Then he should be given freedom. He should be given freedom, and in that he should be given freedom. He should be given power, resources, budget, and support. There should be budget, adequate budget, resources should be available, a complete support should be available. So guys, again a very unique question asked in November 23 mock. You talk about objectivity, you talk about independence, you say that whatever they're saying is correct. To ensure that they are objective, you talk about the status, you talk about organization structure, you talk about the reporting lines, you talk about policy and procedures, more budget to them, more resources to them, more support to them. This will ensure that they can function independently, and they can function with a lot of objectivity. Very important question, guys. It has been asked in November 23 mock. Now, XYZ Limited is appointed has appointed Mr. A to conduct their internal audit for new financial year. The audit committee requested Mr. A to perform detailed analysis of their expenses in previous year and report all risk and underlying gaps. What approach should internal auditor follow to identify such gaps? Okay. What approach they should follow to identify such gaps? That's the question. Let's see, guys. See, these are 5 steps of performing internal audit engagement. KPI of KPI of audit report, key performance indicator of audit report, in case for knowledge. You need to obtain knowledge of the business, of the industry, of the business, of the environment. They need to plan the audit. You need to gather a lot of information about the entity. You need to gather a lot of information, a lot of data about incomes, expenses, assets, liabilities, operation, processes, people, gathering data. They need to perform audit checks after collecting information. Now you need to evaluate the information, study the information, draw the conclusions. That is audit checks. Step number 4. And finally, you're supposed to report on internal audit issues. There are 5 steps. Get the knowledge, get the knowledge of the business, industry, and the business. Then you go for the planning. Then you go and gather information. You perform audit on that information, and you make reports. So there are 5 steps involved. In this question, they are saying that you are supposed to perform detailed analysis of expenses. Okay. So they are explaining 2 steps, guys. They are explaining 2 steps, that gathering the required information and performing audit checks. So the point is, they are not saying it directly. It would have been an easy question. It would have been an easy question if they have simply asked, what are the 5 steps involved? What are the 5 steps involved? It would have been easy. Or they would have asked, how would you gather information? And what audit process would you perform? It would have been better. But the point is, they have not asked that in this manner. They simply said, what should be the approach? What should be the approach? And in the approach, we are explaining these 2 steps. We are explaining these 2 steps. That's why this particular question becomes interesting. So if in exams, if they do such kind of things, okay, we hope that they do something like this from the questions which are given here. Okay, let's see, guys. So they are covering 2 steps. Gathering information. First, they are saying that adequate planning should be done and advance information should be made for interim information needed for performing audit checks. So first, plan about it. We need information about purchase or production or sale. We need information of the accounting. You decide in which area you need information, what kind of information you need, and you send an advance intimation to the department. Okay, after a week we are coming for collecting so and so information. Keep them ready. So advance intimation should be given whenever you want to collect information. Okay, that is one. Then, to the extent possible, internal audit should obtain information directly from the source. Directly from the source. Suppose you need some information from system, then ask for the username, password, and you yourself generate information from the system. So whatever is the root source, try to identify what is source of information and try to gather that information yourself. If someone else gathers the information, they may delete information. They may delete information which may lead to suspicion. They may filter out the information. So directly try to get the information from the source. Integrity. Internal auditor must obtain required information, perform checks to ensure correctness and integrity of the information received. Always ensure that the information is in there. There is integrity. It's complete. It's accurate. It's complete. It is accurate. Perform checks about it. So if you want to, the question was, if you want to take the expenses, you're supposed to gather information. First, give advance intimation. Try to get information from the source and ensure that information is the integrity. It's complete. It's accurate. Check that. Then you perform audit checks. And so that's what audit procedures. So analytical procedures. So internal auditor can also internal auditor can also perform analytical procedures, collect lot of data, compute expected values, compute ratios, compute percentages, make graphs, and then you compare with the previous years, compare with others, and so on. There is a standards on internal audit SI6, standards on internal audit SI6, which tells how analytical procedures can be used in internal audit. To the extent possible, relevant analytical may be used to perform. So when it comes to performing audit checks, or audit procedures, you go and audit checks or audit procedures, you go and perform analytical procedures. Okay. Then when it comes to sampling, wherever needed, internal audit must select sample in accordance with standards on internal audit SIFI sampling. So first go for analytical procedures, then you go for test of details. In that, first you go for sampling. Audit testing. The detailed audit testing must be performed as per audit work plan. Internal audit must ensure adequate evidence must be collected and stored in accordance with SI 320. No need to remember so many standards, guys. It's not required. Audit testing. So go for analytical procedures, then go for test of details, and then go for sampling, then go and perform the tests. Audit issues. Prepare detailed list of the identified audit issues and control gaps. You may come across internal control deficiencies, you may come across misstatements, you may come across errors, frauds. Make a list of that. Interim report. Interim report may be issued after proper review of the work performed as per standard. Interim, before making final report, all the issues and matters which were observed, they can be documented, they can be reviewed, and interim report can be sent to the management for rectification. Document the internal work. Adequate documentation of internal work papers need to be ensured as per SI 330. No need to remember so many standards, guys. Okay. So what should be the approach? Gathering information is one of the steps. Step number three, and step number 4 is performing audit procedures. So you talk about that. You talk about audit checks. You talk about the audit checks. Okay. So guys, it's very important, interesting. And this is a new question altogether. And this is a new theory altogether. This was not in the old course. So it becomes extremely important. Content and format of the internal audit report. What should be the content and format of the internal audit report? Let's see, guys. The XYZ Limited is has appointed Mr. A to conduct their internal audit for new financial year. The audit committee requested Mr. A to present detailed report on findings and areas where immediate action is needed to mitigate critical risk. What should be the content of internal audit report to address the requirement of the audit committee? What should be the content? They are talking about two things here, guys. So there are two things they are covering which was not required, but then they are doing it. We cannot do anything about it. In one part, they're talking about the main thing, content of audit report. That is the main answer. And then they're talking about two stages of reporting. Okay. So let's see one by one. First, let's see content of audit report. Let's see the two stages of audit report and then content of audit report. So first they're explaining on their own, it was not asked, that in internal audit, reporting happens in two stages. Reporting happens in two stages, stage 1 and stage 2. So what happens in stage 1? It is assignment wise internal audit report. It is assignment wise. It is assignment wise internal audit report governed by SIA 370. Governed by SIA 370. Okay. And stage 2 is periodic audit report governed by SIA 380. So let's understand this, guys. So what internal auditor does, he throughout the year he select different departments and factories to be audited. Sometimes he may select a HR department, sometimes he may select a factory A, factory B, factory C, location X, location Y, and so on. So internal auditor divides his whole work into small assignments. He may cover specific area, specific department, specific part of the entity. Small assignment. In that he may cover a specific area, specific branch, specific part, function, department of the entity. Then, so in assignment wise report, details are given how assignment, what was the scope of the assignment, how assignment was conducted, who conducted it, what kind of procedures were performed, what kind of findings he has come across. And report is submitted to the local management also, to local management and to audit also. Local and executive management. So management, report will be submitted to the plant head, department head, regional head. Okay. And apart from that, a copy will go to the appointing authority also. So first thing is, he divides his whole work into small assignments. He goes and checks, he performs the assignment, makes the assignment wise report, who did the audit, what processes were performed, what were the findings, and report is given at both the levels, at the local level and the audit level, company level. Then periodic audit report. Comprehensive. Now what is periodic audit report? Comprehensive report of all internal audit activities planned during plan period. So comprehensive report is going to cover all the audit activities. It is going to cover all the small assignments which were performed during the plan period. It can be during the quarter, or during 6 months, during the year. It is summarized information from the assignment wise internal audit report. So comprehensive report covers all the internal audit activities performed during the plan period, generally quarterly. It is summarized information from assignment wise report. Highest governing authority responsible for internal audit, generally given to the audit committee. It is sent to the audit committee. So reporting happens at two stages. Assignment wise reports are created. Local management is also informed, and then the regional heads and the company level people are also involved. In periodic audit report, it is nothing but it's a comprehensive report. It's a summary of the assignment wise report, and it is given to the highest authority, audit committee. So audit committee gets the summary of what happened, what were the findings during the quarter. Then next is, what are the contents of the audit report? Contents of the audit report. Let's see, guys. So this is it. What are the contents of the audit report? So first we explain the scope. Okay, this was the area we covered, this was the factory, or this was the department, this was the region we covered. Then the period. You have covered how many months or quarters or years. Audit period. There will be executive summary. Executive summary will be there of the whole process. And critical findings. Summary of critical finding. It will be executive summary and then summary of critical findings. So executive summary will in short explain what was done and what was done and what kind of findings were there, and what is the overall conclusion where things are appropriate or not. So executive summary will be there, critical findings will be explained, then detailed audit findings with elaboration of business impact, root cause of the issues. There'll be rating of the issues with high, medium, or low. Detailed audit findings will be there. Issues will be given. Impact will be given. Quantification will be done. Rating will be done. Audit recommendations will be given. How to improve control environment. How to improve internal controls. What response was received from the functional authorities. And so it's very simple, guys. First, you explain the scope, you explain the period, give the executive summary, what happened in the assignment. Then you go for the critical finding. You focus on the critical findings. And then, so you can say that this is one part. And then this is another part. Detailed audit findings, what is wrong, what is going to be the impact, or its rating, recommendation of each issue, response received over each issue. So those will be written at one place. Generally, it is in a table form. These are the findings, this is the impact, these are the ratings, these are the recommendations, these are the responses received. So you can make two parts. So this thing is in a flow, and then this thing is in a flow. Okay, that is how you can remember. So remember two stages, and then content of audit report. They didn't ask for the two stages. On their own, they have written it. So we need to understand, okay, we'll also write it on our own, that these are the two stages and this is the content of audit report. Now, next is very interesting. Very interesting is follow-up. Now, they're not asking it directly again. That is the most important part of the whole new Q&As. They are not asking things directly, guys. They're not asking things directly. They're giving hint of the things. So that makes it's very important to identify what exactly we have to write. XYZ Limited is appointed Mr. A to conduct internal audit of new financial year. The audit committee requested Mr. A to present their analysis on implementation of the recommendation. To present analysis on implementation. So we have to give analysis. What is happening, whether our recommended implement or not. Previous audit report and highlight critical areas which need immediate action of audit committee. What should be the steps followed by internal audit to address the requirement of audit committee? So they are not using the word follow-up. Guys. Okay. Let's see. So SI 390, monitoring and reporting of prior audit issues. The chief is responsible for continuously monitoring closure of the prior. Let's see a chart on it, guys. Follow. So this is SI 390. See, interim reporting was 370, assignment was reporting was 370, periodic audit reports was 380, and follow-up is 390. So there is standards on internal audit SI 390. It defines what do you mean by follow-up, or what do you mean by follow-up, or what do you mean by monitoring. First go with the definition. So it refers to periodically tracking that these issues were raised in the prior audits, these recommendations were given, and we want to understand, are you implementing the recommendation? Then we monitor that what issues were raised, what corrective actions were suggested, and whether corrective actions were taken, recommendations are implemented. So in follow-up, we see the matters, we see what corrective actions are taken, and whether still any of the issues are open, and pending, and we report it to the management. To do this follow-up or monitoring of what happened about the prior issues, how many of them were corrected and how many of them are pending, it is responsibility of the chief internal auditor. Continuous monitoring and implement an action plan and closure of the, so it is his responsibility to check whether prior issues are closed, continuously monitor whether prior issues are closed, plans are implemented, and how many of them are pending. There shall be a formal monitoring process as per agreed. There should be monitoring process, and there should be ATR, action taken report should be prepared. Action taken report should be prepared for that. If no action is taken within reasonable time, if no action is taken within reasonable time, draw management attention. These are the things which were reported, recommendations were given, problems were specified, but then no action has been taken. Inform it to the management. Why or not? If management has not acted upon suggestions nor implemented its recommendation, ascertain the reasons. Okay. So if you come across things, ask management, why have you not done it? We already told everything. Still management has ascertained the reasons why you are not implementing the suggestions. There is lack of resources, there is lack of budget, there is a lack of time availability, or you have certain more important things to, whatever are the reasons, note it down and inform the top management about it. And inform TCWG, inform management TCWG about it, that okay, these we informed, no action was taken, even management was informed about it, still no action was taken. What are the reasons? Note it down and inform them. Where management has accepted its recommendation and initiated necessary action, periodically review the manner and extent of implementation. If they have accepted, recommended, started implementing, go and review how the implementation is going on. Report to management highlighting the recommendations which have not been implemented. So inform the management, these recommendations are implemented, they are in process. Some of them are implemented fully, some of them are in process. Inform it to the top management again. So guys, we need to focus on three things. Number one, supposed to focus on definition. So we are supposed to focus on three things. Definition, what do you mean by monitoring? Periodically tracking the issues raised of the prior period, checking whether corrective actions are taken, and then informing them who is responsible, and for this ATR is prepared. If they have not following the recommendation, inform it to the management, talk to them, they have not acted, what are the reasons, and explain people what are the reasons. If they have acted, see the progress and tell which recommendations are fully followed and which are partially followed. So guys, again, it's very interesting. There's a good chart out there which you can use. So chart beautifully covers everything, guys. Then, can we rely on work of internal auditor evaluating going concern? So, very interesting question again. Up Down Limited is in doldrums, is in problem for last 2 years. The demand for its product is declining. So, there's a going concern assumption is having a problem. The internal audit has helped management to devise a strategy to deal with such risk. Internal audit has helped management. And outcome of the situation, the plan includes venturing into different product lines, using same plant with modifications. Further, internal audit has also prepared estimates of revenue generation along with the cash flows. Can such auditor place total reliance on work performed by internal auditor in this regard? So, internal auditor has evaluated going concern and he has given advisory on going concern. So, can we say that only can we rely on him that you evaluate going concern on my behalf? The greater the judgment needed in planning and performing audit procedure and evaluating audit evidence, the external auditor will need to perform more procedure directly, because using the work of it alone will not provide sufficient evidence. Going concern assumption requires significant judgment on part of statutory auditor. Cannot place total reliance. Okay. This is answer purely as per SA 610. You give reference of SA 610. In there we discuss step number 2. We discuss step number 2, that areas in which a lot of judgment is involved in planning and performing, or area in which very high risk of material misstatement is involved, high level of RMM is involved. We prefer to audit them directly. We do all the work instead of relying on internal auditor. Further in this case, he has only done the groundwork, and we cannot ask him only to go and evaluate it. Okay, so there's a objectivity issue also. He has done all the work. How can we ask him only to evaluate things on our behalf or use his work? So you discuss the case and you give the conclusion that lot of judgment is involved, lot of judgment is involved, lot of risk is involved. So we cannot rely on work of internal auditor. It's better to do work directly, audit directly instead of relying on the internal auditor. Okay. Again, a very good case, guys. A new case altogether from in study material. This is a very, very old question. I don't know how relevant it is, but then has been asked many times. But attrition rate. About attrition rate, that there is a very high level of employee attrition. High level of employee attrition. What factors would you, as internal auditor of the company, request you to analyze the causes for the same. So, with this very high attrition rate, and you're supposed to analyze. So, what factors we will analyze? So, we know that what things contribute to attrition rate. Okay. So, first, training and work culture. Employees may not be given proper training. Employees may not be given proper training, and that's why they're not happy with their jobs. That's why there's attrition. Work culture is very bad. Okay. A work culture is very bad. Outdated work culture, using typewriter. They're not given training. There's a very outdated and old way of working. Because of that, there's attrition. Timings. There's a lot of job stress, work-life imbalance. Because of that, seniors are always shouting. They are not very supportive. Unbearable behavior, or they're not having experience in handling the team. Colleagues, excess staffing is the number of people employed various is excessive. Because of excessive things, a lot of issues will be there. Time wastage. Because of lack of people, again there's a problem. Salary, maybe it's very low. No welfare schemes. There is no safety. So all these can be issues. So when employees comes, he may see the lack of training, not good culture. That's the problem. He starts working. Work times are work-life balance is not there. That's the issue. Then seniors, he meets the seniors. Seniors are not good. They're not qualified, experienced. They're always shouting. Then colleagues, either they're in excess or they're inadequate. Then finally you get the salary. And then the final thing is safety. So it's in a sequence, guys. First, when employees come, we talk about training. Then he joins the office, then we talk about timing. Then he meets the senior, we talk about seniors. Then he meets the colleague, we talk about colleagues. Then at the end, he gets the salary, we talk about that. And then safety. When he goes back home, we talk about safety. So guys, we are through with a very interesting chapter, that is internal audit. A lot of interesting questions were there. We move to the next chapter number 17. And guys, in this there are three things. You're talking about due diligence, investigation, and forensic audit. The three parts they're talking about: due diligence, investigation, and forensic audit. Let's see, guys. Now, what is due diligence and what is investigation? What is forensic audit? Okay, let's see one by one. So the first question is, let's focus on the part one, that is due diligence. Part two is investigation and forensic audit. Audit versus due diligence. How both are different. Now it's very simple, guys. When we talk about audit, our ultimate objective is to give opinion on financial statement, whether they are as per applicable framework, and if there is a applicable framework, if there is a fair presentation framework, we have to say whether it gives true and fair view. That is our ultimate objective. That is our ultimate objective. Financial statement is our ultimate objective. Whether financial statements are appropriate, that's our ultimate objective. We focus on financial statements. But then due diligence is also a type of examination. It is also a kind of examination. It's a kind of verification. In due diligence, acquiring entity, generally acquiring entity. So whenever a deal is going to happen, mergers are going to happen, acquisitions are going to happen, acquiring company appoints a professional that you go and evaluate the potential investment. You go and evaluate, study, analyze the potential investment, confirm all material facts, go and evaluate the prospective business opportunity, go and see financial and non-financial records, go and see all the factors. If we are going to acquire this company, this business, go and see all the factors, whether it's making sense financially, making sense legally, making sense operationally. So go and think, go and see all the important things, all the reasonable things before entering into agreement, or transactions. Okay, so it's very simple, guys. Audit simply focus on the financial statements, but when it comes to due diligence, acquiring company, purchasing company appoints a person to go and evaluate the potential investment, potential business opportunity, see all financial, non-financial records, all the important aspects before we commit and we go for agreement or transaction with another party. That's called due diligence. So the objectives are different. Your objective is a financial statement give true and fair. Here it is whether to go for acquisition or not, whether to acquire or not, whether to go for amalgamation or not, whether to go for merger or not. That is the ultimate thing we are focusing on in due diligence. Financial due diligence. Financial due diligence. So proprietor of a very profitable business sell his business. A proprietor want to sell his business, okay, and due diligence of business. They are using the word due diligence. Now listen, guys. We are going to see in part two. They talk about investigation. Okay, buying and selling of proprietor's business, investigation. That will go in part two. Whenever they use the word due diligence, you have to stick to due diligence only. And if they don't specify anything, it is financial due diligence. It is financial due diligence. Again, wants to sell his business, due diligence audit. They are using due diligence audit. Okay. So due diligence review. Sometimes they use the word due diligence audit, due diligence review. Anyways, there's a big answer to it, guys, but we have made a very good chart. Let's see quickly. So when you talk about financial due diligence, generally when the business acquisition or sale negotiation, so timing when financial due diligence is conducted. Generally, financial due diligence is conducted once overall price of the business, when overall in principle the deal is agreed, the price is agreed, broad points are agreed, okay, on the basis of net worth, profitability, and but then to confirm the things, to confirm the matters, due diligence is conducted. Objective is to go beyond initial information, to look at the benefits, cost, business opportunity, what are the good things, bad things. That is the objective. Scope is generally financial due diligence is about the complete due diligence. We go and see all the aspects, all the important aspects which a person should think about before acquiring a business. Okay, but be cautious. You should unless it is detailed to cover all aspects, it should be only the financial aspect of the deal. So we generally, chart account, focus on the financial aspect rather than more technical and operational aspect. It's very simple, guys. We say that when it is conducted, what is the ultimate objective? It's a financial due diligence. We cover all the financial aspects. We stick to the financial aspects only. Now, to remember the points, we have a simple story, guys. A very simple story. Okay. So in financial due diligence, we do 7 things. So we went to managing director. So we went to managing director, go and discuss the history. Go and understand who incorporated the entity, when the business started, what were the initial products, what were the ups and downs, what are the key reasons for the growth. Understand the entity well, because we need to understand why they grew, what was the secret, and we need to ensure that those things are still, we want to check whether those things are still there with them or not. What was the reason for the downfall? Go and understand the history. Who incorporated, what different businesses they did, what are the reasons for the growth, what are the reasons for the downfall. That will be very important knowledge which will be useful in deciding whether to acquire this company or not. Go and see the historical base. Then we are not buying for history. So again, go and discuss the financial projections. What is going to happen in next 5 years? What kind of turnover, what kind of market share, what kind of revenue, what kind of expenses, profits, cash flows are going to happen, what is going to be the profitability of the future. Go and look into the financial projections. Give heading and write 2-3 lines. Give heading, write 2-3 lines. Give heading, write 2-3 lines. So when it comes to financial due diligence, we always look into the history. Then we look into the financial projections. Then we went to CFO to discuss technical thing. Significant accounting policies. Would like to understand that we know your business, what kind of goods and services you sell, and how you produce them, etc. We want to understand significant accounting policies. How you recognize your revenue, when you recognize your revenue, what amount you recognize revenue, we want to understand that. How you book your expenses, how you book your depreciation. We want to understand significant accounting policies, whether they are as per the framework, whether they are in line with what industry does, or they are very different. Whether there were recent changes in the significant accounting policies, whether profits are generated by change in accounting policies, we want to understand that. Then once we understand accounting policy and we feel that they're good, we review the financial statements. We review financial statements, what has been the trend in the financial statements about the turnover, what is the kind of profitability, what is the earning per share, what is liquidity ratio, what is debt equity ratio, is it looking a healthy balance sheet P&L? Is it looking healthy balance sheet P&L? Is the net worth appropriate? Is net worth positive? Whether profitability things are good, whether growth is good. So we go and review financial statement. We then go and see cash flow statements. How much operating cash they are generating? Are they generating excess or there is a deficiency? How much more cash they are going to need in next 1 year? 1 year, how much cash they will need? From where we can generate this cash, for how many years they will need more cash. So that cash flows are very important. How much support we need to give to this particular business or company. Then from CFO we discussed about accounting policies. From that we came to financial statement. From financial statement we came to cash flow. That's what will happen. First comes accounting policy, then comes financial statement, then comes cash flow. Then statutory compliances. We met legal head. What are the big laws applicable? Are they complying with all the environmental laws, tax laws, they're complying with all the laws, whether any proceedings or litigations are pending against the company, what are the implications, we go and discuss. Human resource, whether staff is adequately paid, when was the last time revision of the salary was done, whether their gratuities are covered, their pensions are covered, adequate provisions are there. It should not happen. We acquired the company and now everyone wants raise in the salary. Everyone wants raise in the salary. Everyone wants bonus, commission, provident fund, etc. So we need to check that. So you go to managing director, 2 points are covered. You go to CFO, 3 points are covered. You come to legal head, 1 point is covered. You come to HR, 1 point is covered. And that is the sequence of the status. First is MD, below that CFO, below that legal head, below that HR head. Okay. So that is all about financial due diligence, guys. If you write under each heading, if you write one point, that will be good enough. Then we talk about undervaluation and overvaluation. Undervaluation and overvaluation, a very simple, straightforward thing. What to do about hidden liabilities and overvalued assets? Hidden liabilities and overvalued assets. So they keep saying this, hidden liabilities and overvalued assets. Overvalued amounts. So whenever you go and see hidden liabilities and overvalued, okay, very beautiful chart again we have created. Hidden liabilities and overvalued assets. First we talk about hidden liabilities. So we talk the biggest one being first hidden liabilities with respect to any government, related to government, then related to shareholders, related to the financiers, related to subsidiaries, to employees and customers or other third parties. So when it's come to government, we need to see whether any show cause notices, whether any show cause notices are pending. It may be pending. If it is, it should become contingent liability or actual liability. Actual liability, whether the tax liabilities are unrecorded, direct tax, indirect tax, any unrecorded liability with, first of all, from government side, when either show cause notice are pending, it can lead to liabilities. There's any hidden liability, unrecorded liability in direct tax, indirect tax, it can come from pending proceedings or provisional final assessment is pending, only provisional assessment was done. In final assessment, more tax may need to be paid. So go and see talk about show cause notices. You go and talk about the taxes, about the pending proceedings, about the final pending as final assessments. Then shareholders, whether any buyback is promised to them, liability may arise because of that also. Just a minute, guys. So shareholders, then you talk about finances, whether you have issued any letter of comfort, to the banks and financial institution on behalf of subsidiaries and joint venture and associates. A detailed analysis will be required of the letter. Letter of comfort is kind of assurance to people that these are good people, you can give money to them. If anytime they're in problem, we will help them. So depending on wordings and the situation and circumstances, when it is given, to whom it is given, with what intention, it can become a contingent liability. Then subsidiaries. If there is a sale of business of subsidiary, whether you have promised to indemnify any liability or losses which arise because of the business of subsidiary, even that will become a liability. Then employees, unfunded gratuity, superannuation, leave, salary, liabilities, then it may not be properly valued or labor may claim the increase. So keep in mind whether such liabilities are there. Customers, where there is liability on because of returns, liability related to discount, late deliveries, warranties, litigations and claims. Other third parties, whether environment related liabilities are there, lease liabilities are there, content liability not shown. So guys, lot of things. So government related show cause notices and tax related matters, shareholder related buyback, finance related letter of comfort, subsidy related indemnity, employee related this liability for gratuity, pension, salary, superannuation, customer related returns, discounts, late deliveries, warranties, claims, environmental liabilities, lease liability, and so on. So there can be a lot of hidden liabilities. If you remember in this sequence, okay, you will be remembering a lot of points. Then overvalued assets. Then we talk about overvalued assets. IIT says fixed assets are overvalued. IIT says that fixed assets are overvalued. Okay, anyways, a simple thing can be, first is fixed asset, whether any of the assets are obsolete, impaired, underused, under litigation, under or in intangible assets of no use. So whether there is a problem with the fixed assets, they are obsolete, impaired, underused, under litigation, no proper capitalization, intangible assets are useless. After fixed assets, we talk about investments, whether market value is much lower than the cost, very low rate of return, that shows that they are overvalued. Then inventory, obsolete stock, slow moving stock, packaging material which is not usable, we need to write it off. Trade receivable, uncollectible, group company balances. So talk about fixed asset, you talk about investment, you talk about inventory, talk about trade. Much better. This flow is much better than going to remember the shortcut. So very famous question, guys. They keep asking about hidden liabilities. They keep talking about the hidden liabilities and overvalued assets. Now we talk about due diligence report. A Japanese company engaged in business request to conduct a due diligence and submit your report. Key areas you would cover in the review. Key areas which you will cover in DD report. List out the content of the DD report, due diligence report. Let's see, guys. So when we talk about content of DD report, we have to give background first. So introduction, that it is a due diligence report. This is a report which is prepared after performing due diligence at request of A Limited, and due diligence of B Limited. Prepared on the request of A Limited. You give small introduction, explain the complete background of the target company. So they're into which particular industry, what is the location, who are the promoters, what is the present turnover, profits, okay, and so on. Background of the target company, history of the company, when it was incorporated and how they have done over a period of time. Objective of due diligence, what things we are focusing on. Okay, are we trying to find out from history plus and positive points, negative points? Are we focusing on financial projections? Are we focusing on financial review of financial statements, about the legal issues? What are the key things we focused on? We have seen what kind of things can happen in financial diligence. So what are the objectives? Then the scope, how much time period, how much of the business we are covering, time period we are covering, and finally the executive summary. So we talk about the introduction, then we talk about target company, its history, what was our objective, what was our scope, and finally the summary, what we have seen. Then we talk about operational overview, shareholding pattern, who ultimately controls the company right now, what is the shareholding pattern, below that what is the management structure, who is governing the company, how they are governing the company, what is the operational results, SWOT analysis. So what is who is controlling the company, what is the management structure, what kind of financial performance they are doing, SWOT analysis, what are strength, weakness, opportunity, threat in this company. Then what about asset valuation, liability valuation, liabilities, net worth, properties, charges, investments, receivable. So financial assessment, we talk about different assets and liability. How good are their assets, liabilities, net worth, properties, leases, charges. So we talk about operations, we talk about financial assessment. In that we more talk about assets, then talk about liabilities, what kind of litigations or future liabilities may come up. So future liabilities and what kind of future projections, we comment that also. Recommendations, that we may talk about indemnities that, listen, have an indemnity contract. If something goes wrong, they are supposed to pay. Cover these things under indemnity. We may give these suggestions. Aspects to be taken care of about employee related matters or tax related matters. Okay. Observations, our key observations. So guys, you talk about the initial introduction and the background part. You talk about the operational overview. You talk about the financial assessment, liabilities. You talk about future, recommendations, observation. Even if you write 60-70%, it will be good enough. This flow is going to help you write more things. You cannot ratify all the things. That will be very, very difficult. They are covering two things here, guys. Key areas they are covering. Financial due diligence, and after that they are covering about the audit report, about the report. Very interesting. Study material 23. So they are giving a situation and they are asking us to do the SWOT analysis. That what are the strengths, weaknesses, opportunity, threats. So it's a bank. It's a bank posted in Noida. Private sector bank posted in Noida. One of the existing borrowers has approached branch with a proposal to sanction. So it's a bank basically. In bank, there's a proposal from a borrower. Fresh limit of 5 crores with commensurate increase in working capital. The person wants term loan of 5 crores with increase in working capital credit facility to expansion. Wants more credit facility, cash CC, more CC limit of its garment manufacturing unit. Is formed just 2 years. The company has formed just 2 years and had availed term loan of 10 crores. Already there is a term loan of 10 crores and CC limit of 5 crores, and he wants more term loan, more CC limit also. Increase from 25 crores in first year to 45 crores. That's really good. See, let's keep on thinking about the positives and negatives. Okay, just a very new company, that's a negative. But the turnover has increased, that's a positive. The borrower has earlier catering to domestic market. Now it is in process of export order. Okay, they want to expand to export, that's positive. And they're in line with development in area of marketing, rating, exports. So they are doing marketing, that's a positive opportunity, positive point. There are large number of units catering to domestic market and export market of garments in Noida. So, but then there are large number of such people. There's a tough competition. That's a negative. There's a demand slump in biggest US market. That's a negative. Beside, the unit is family based. That's a negative. Marketing skills of the main promoter. There is lack of well paid. That's a negative. Well paid staff. There is no proper staff. He starts jotting down, elaborating above points. Identify what he's trying to do as part of the duty. They are not asking directly. What is he doing. That's the problem with these questions, guys. They are not directly asking what they want. So they are saying he's jotting down these points. Tell me what are those points. So this is SWOT analysis. Strength, weakness, opportunity, and threats. Strengths, they are growing very fast. That is their strength. They are having profits. that is their strength. They're paying their debts properly, that is their strength. Weaknesses, lack of well paid staff, that is a weakness. Family managed, that's a weakness. No proper staff, that's a weakness. There's a lot of competition, that's a weakness. Okay, a lot of combination that they have put into threats. New markets, that's an opportunity. That's an opportunity. So what positive things are there right now, that is strength. What negative things are there right now, that is weakness. And they're not writing that it is a SWOT analysis. They're saying, please explain what they're trying to do. So they're trying to do SWOT analysis. And very good thing is, in main theory, they don't talk about all these things. That's why Q&A practice becomes important, guys, because of these things. Now, so we are through with part 1. Let's go to part 2, guys, investigation. Part 2, that is investigation. So investigation for incoming partner. Investigation for incoming partner. They have framed a small case. Dalal, Banerjee, Malik are partners in the firm, 2:1. The partner have agreed to take Mr. Mistry as a partner, 1/4 partnership. What are the important steps while conducting investigation on behalf of Mr. Mistry? Okay. Let's see. So investigation on behalf of incoming partner. Investigation on behalf of incoming partner. So whenever we are investigating, the first thing we will focus on, what's the ultimate purpose? Ultimate purpose is that whether the terms which are the kind of firm and the terms which are being offered, are they favorable for the incoming partner? And the amount of capital they are asking, whether this capital is going to be safe and applied properly, whether terms are lucrative, favorable, whether capital contribution is going to be safe and applied usefully. Those are the two targets. Whether terms are good, whether our capital will be safe. What areas we cover? Number 1, we see history and reasons for the offer. So we see the history of the firm. So in totality, we see 5 points. So we first see the history. How old is this firm? What they have been doing? What has been their growth, success, positives, negatives? Whether they have proved their business model, business acumen. So we look at the history. We look at their partnership deed also. We look at their partnership deed. How many partners, what are the terms and conditions, profit sharing ratio, salary, interest on loan, etc., whether it's reasonable, acceptable or unusual. Then we look at the reasons why you have invited us, whether you're in need of money, why you are needing money. You are going for expansion, you need expertise, or someone has retired, you want to fill up the shoes, where there are valid, genuine reasons, or it is simply to take my capital and gulp it up, that's the reason. What is the present situation? Whether you are having quality staff, whether adequately staffed, quality staff, whether they will stay with us as stay with the firm as I join, where there is a good clientele, good orders. So we want to understand how good is the staff, whether they will continue in future, how good is the clientele, how good are the orders, revenue. Financial statement analysis, profitability analysis over the period, capital employed, rate of return on capital employed, asset liability position, net asset position. In partnership deed, okay, asset related things, liability related things, term loans, incomplete contracts, contingent liability, So we understand these things, guys. So anyways, let's freeze. The purpose is very simple. Whether terms are favorable, whether my capital will be safe. Areas, we talk about history, we talk about partnership deed, we talk about reasons, we talk about present situation, we talk about financial analysis. So that's what we do when we talk about investigation on behalf of incoming partners. Audit versus investigation, how both are different. Audit versus investigation. Audit versus investigation, how. Okay, let's understand audit versus investigation. So when we talk about investigation, it is for specific purpose. Audit is for, we know ultimately whether financial statement is true and fair view. It is for specific purpose, and this purpose can keep on changing. It can be to establish a fact, whether the value of the land is so much, production cost is so much, whether the fraud has really happened, or assessing a situation, where to invest or not, whether to go into partnership or not, and so on. So there is a purpose, it keeps on changing if I establish a fact or assess a situation. So there is objective. Applicability, audit is mandatory. Audit is mandatory, but here it is voluntary, and sometimes it is mandatory as per Companies Act. Who does it? Audit is done by chartered accountant. Here it can be done by any person. Time frame, audit is generally for a year. It can go for quarterly, half yearly, but here in case of investigation, it can be several years or a part of the year. So first the concept, then the applicability, who is going to do it, how much time they are going to cover. Scope, in case of audit, is governed by law and essays, sometimes law or letter of engagement. In audit, we don't come with any preconception. We come here with preconception. Fraud has happened. In audit, we go for sampling. Here we go for detail checking. In audit, we focus on compliance of accounting principles. What are accounting principles, procedures, disclosure? We don't focus on these things a lot. Evidence in audit is persuasive. Here it is conclusive. Reporting is done to shareholders, to appointing authority. In audit, there are inherent limitations. There is generally no inherent limitation. We have a lot of powers as compared to audit. So the concept is different, applicability is different, who does it different, then preconception is different, the kind of audit procedure we perform is different, evidence we take is different, our focus point is different, inherent limitation different. So there's quite a difference between audit and investigation. In a company, it is suspected that there has been embezzlement in cash receipts. The company appoints you as an investigator. There's an embezzlement of cash receipts. Appoint you as an investigator. What are the areas you would verify? What are the areas you would verify if there's a problem with cash receipts? Okay, guys, embezzlement in receipts. What are different ways in which embezzlement may happen in receipts? Okay, let's see. So, how frauds can happen in cash receipts, or how frauds can happen in customer ledger fraud? They have merged because they are similar points. So first, invoice related points. So while making invoice, a large discount can be after making invoice, after invoice is prepared in carbon copy. In carbon copy, a large discount can be shown, say a discount of 1000 rupees can be shown, and that 1000 rupees can be taken away. So when you make invoice, suppose invoice of 10,000 rupees is made, given to the customer, in carbon copy, we will write that there was a discount of 1000 rupees, and that 1000 rupees is taken away, and withdraw the difference. Okay, or in carbon copy or counterfoil, lower amount of sales is recorded, and again difference is withdrawn. So this is how frauds take place in cash receipts or customer ledger frauds. At the time of making invoices, these two things can be done. In carbon copy counterfoil, large discounts can be shown and difference can be withdrawn, or lower amount of sale can be shown and a difference. Actual sale happened of 10,000 rupees, but on counterfoil, what you note is 8,000, and you withdraw the 2,000 rupees difference. So there are two invoice related points, two accounting related points. Okay. So while doing accounting, we may short debit the customer. When the credit sale was booked, we short debit the customer, and when you get actual, we debited customer only for 8,000, we got 10,000 rupees, 2,000 is withdrawn. Cash receipts are shown as receipt from the customer. So it is cash account debit to customer account credit, and you show that amount is payable to customer, and you withdraw that amount. Short debit the customer, withdraw the difference. Show cash sale as receipt from the customer and withdraw the credit balance and make payment for the credit balance. Receipt of one customer credit to another customer. Receipt of one customer, see there's an outstanding balance of 1 lakh. He gave you 1 lakh. Instead of writing cash bank debit to that party 1 lakh, knocking off, credit to the another customer. Show it as a credit balance and withdraw it. Show fictitious sales return and again show the payment. So it is manipulative accounting and then withdrawing. Short debiting and then withdrawal. Cash sale credited as receipt and then withdraw. One customer's credit to another customer, then withdraw. Fictitious sales return, then withdraw. First, misappropriation. Withdrawing the misappropriation, the collection, and then writing of the bad debt, writing it as a bad debt, or writing it as an allowance or a discount. So some are invoice related, accounting related. First manipulative accounting, then withdrawal, first withdrawal and then manipulative accounting. Very interesting. If you remember in this way, guys, you will be able to remember more points. Then balancing related, undercasting and withdrawing the difference, undercasting receipts and withdrawing the difference, overcasting payment and withdrawing the difference. So these are cash receipts fraud, or you can say that on the same lines we have customer ledger frauds. Then we have supplier ledger frauds. Supplier ledger frauds, guys, again, supplier ledger frauds. See, cash payment and supplier ledger. Inflating payments, paying for fictitious bill is a fraud. Duplicate bills, paying for duplicate bills is a fraud. Booking purchase at higher price and making payments is a fraud. Excess totaling of the waste sheet and making excess payment, that's a fraud. Personal expense shown as business expense, that's a fraud. So straight away the bill is fictitious or duplicate, or the bill is original but the price are higher. Wage sheet is original but totaling is wrong. Everything is original, it is a personal nature expense shown as business expense. Inflating payments. So if credit balance is outstanding in suppliers or customers, withdrawing that, that's a fraud. Showing fake refund to customer and withdrawing the, showing that, okay, amount need to be refunded to customer. Amount need to be refunded to the customer. Showing sales return and withdrawing the amount. So withdrawing credit balances is the thing. Suppressing credit notes. Supplier has sent credit notes that don't pay me money, pay me less. Suppressing Then suppressing credit notes and withdrawing the excess amount. Suppressing credit notes and withdrawing the excess amount, guys. Again, there was a credit note of there was a credit note. They were credit notes, guys. But then those credit notes were suppressed of few lakh rupees, and then the supplier said pay me less, but then credit notes were suppressed and the total payment was made. Again, that's a fraud. So guys, there's a cash payment, supplier ledger frauds. These are payment frauds. Then playing with the ledger account, and again there are frauds. So a lot of these frauds can happen. Guys, even if you cover the points, 70-80% points, it is good enough. So there are cash receipts frauds. You can call it as a customer ledger frauds. There are payment frauds. There are payment frauds. Okay, there are payment frauds, or supply related frauds are there. Then inventory related frauds are there, guys. Inventory frauds. Let's see. So fraud can happen in two ways. Fraud can happen in two ways. Number one, that when goods are coming, that time misappropriation can happen, or when goods are stored, that can happen, or when they are going, that time misappropriation can happen. So when the goods are stored, simply employees are removing them from the premises, or goods are and this is concealed. This is concealed by writing off as damaged goods, or inventory records may be manipulated, can undercast the receipt side, can overcast the receipt of goods, or overcast the supply of the goods, transfer of the goods, to again hide the fraud of inventory which is being done. So you talk when the goods are coming, there can be under delivery. When goods are gone to storage, that time there can be theft. When the goods are issued, higher goods can be issued, again there can be theft in that, and it can be concealed by showing it as a damaged good, obsolete goods, or manipulating the inventory records. It may be trading stock, raw material, anything which can be easily sold. There can be in any stock. It can be raw material, it can be stores, it can be tools, it can be anything which can be converted into cash. The loss may be as a result of theft of employees once or separately over a long period. When the same have not been detected, such thefts usually possible through collusion. There can be collusion, there can be concealment. Therefore, for the detection, the entire system of receipt, storage, and dispatch of all goods should be reviewed to localize the weakness in internal control. So we need to check the internal control system. The determination of factors which have been responsible for the theft and establishment of guilt would be difficult in the absence of system of internal control. It will be very difficult to detect the thefts. There should be very strong internal control system. Availability of sufficient data. There should be very strong internal control system to protect the company from inventory frauds. And then only with the help of controls, a lot of frauds can be detected. There should be sufficient data. How many goods were received, what was the movement of the goods, how much was issued, how much was obsolete, with experts report, and so on. The steps in such investigation is to establish different items in a defalcated and their quantities by checking physical. The best way is to physical verification, that what is the physical invented, what is in the records, are also committed by the management. Sometimes management also do it by diverting part of the production and consequent shortage in production being adjusted by inflating the wastage in production. So they may divert the production and they may show that there was a wastage, it was defective. Inflating quantities issued for production. For detecting such shortage, the investigating accountant should assistance of engineer. So if there manipulation in the production thing, engineer, he will be able to calculate for so much of production, how much, okay, how much raw material will be required. In this regard, guidance can be taken from past record showing the extent of wastage. Past records, extent of wastage, we can check wastage from there. And further, we can also check the per hour capacity of the machine and the time it took to complete one cycle of production also would show whether the issues have been larger than those required. Okay guys, let's freeze. So first you need to tell what can be the sources. First, you tell what can be the sources. As I said, when goods are coming, you talk about the short delivery. You talk about in store short delivery, or there can be a problem, or unnecessarily goods are shown as damaged good. There can be a short delivery can be a problem when they are stored. It can be stolen. That can be a problem. Excess issue can be a problem. Okay, employees can do it. That's a problem. Management may divert the production and that can be a problem, and they may say that it was a defective production. They may divert the production, get the money defective. So employees can do it, top management can do it, or so these kind of defalcations can happen. The best way to check is physical verification. So first to explain the reasons, physical verification. Then if they're trying to conceal, go and catch hold of the engineer. Go and catch hold of the engineer. Engineer will tell that how much production, how much material is required for production, and see whether consumption is like that. If the excess consumption, again there's a defalcation. And you also see for how many hours machines have been working. If they're saying that consumption is 500 units, but machine has been working only for 300 units, again there is a problem. Again that shows that there's a defalcation. So you talk about sources of defalcation. Physical verification is good, engineer help is good, matching number of hours is also good. Guys, it's pretty simple. Investigation of the borrower. Investigation of borrower again is there. So I will say that let's stick to one investigation of borrower, use it at both the places. It's pretty simple, guys. First, the basic reasons why they want, first focus on the basic, why they want the loan, how are they going to repay the loan, what if there's a default, there's a security, RSS. Then collecting information from the past, what is the past, present, past history, growth, reputation, present permissions, MOA, AOA, purpose, manner of investment, future, how they are going to grow, how much cash they are going to generate, revenue, cash flow. Then you talk about evaluate. Then you talk about evaluating. First, talk about collecting information from past, present, and future. What kind of assets they have, what kind of liabilities they have. Evaluate P&L items. What kind of annual sales. Analyze 5-year sales. Analyze profitability. So you talk about the RSS thing. You talk about information source, assets, liabilities, P&L items. Are they strong enough? They have been very strong, good trend in the past, good trend in the future. Ratios. current asset ratio, quick asset ratio, equity to fixed assets, equity to long term. These ratios will be helpful, guys. I am doing it very fast, guys, because you simply write about that. You cannot learn so much. So you need to, broad points you need to remember and then reproduce it. Now here they have put a case study. It was there in May 23 mock, May 23 RTP study material 23. Mr. Rajul is acting as a credit manager of a branch and a request has come worth 10 crores for meeting usual business requirement. It is a prospective new client. She checks past history, background, promoters, assessment of financial results, SWOT analysis, CIBIL score, position. She also makes discrete inquiries from few clients of the branch engaged in similar line of activity. Based on above, identify the activity being performed by Rajul and discuss the nature. Would your answer be different if the activities was to be performed by a person not qualified as chartered accountant? Name any 3 other areas where identified activity can be undertaken. Now guys, this has been the question, and that is quite surprising the way they have put answer. I am not personally very happy with the answer they have put. So they say that it is a due diligence. It is a due diligence. In due diligence, we are careful in taking decisions. We see all the financial aspects. They are saying by reasonable and prudent person, we'll see all the points. So they are saying it happens in whenever there's a potential investment. We see financial, non-financial records. Generally, when we trying to acquire a company, no difference whether the person is CA or not CA. The principles of due diligence should be followed. Analysis should be proper. It can be used in corporate restructuring, venture capitaling, public offering, IPO and all. So guys, this is the concepts which we have studied. Now, we have a exact, just before this, we had a question on investigation of borrower. We have a question on investigation of borrower. So basically what is being done right now is an investigation of borrower. But CA Institute says that no, it's a due diligence. In due diligence, you examine, verify all the financial, non-financial facts for the potential investment, for the potential opportunity, for the potential investment, potential opportunity. You focus on what? You focus on whether you focus on all the points which a reasonable and a prudent person, which a reasonable and a prudent person will focus on. So they are calling it as a due diligence. Actually, it is an investigation of borrower, but they are calling it as a due diligence. They are saying it. See, there is no law, there is no accounting standard for these terms. There is a very vague meaning of these terms. So they are putting it. So we need to remember this, that they are putting it as a due diligence. If such kind of question comes, they are putting it, okay, it's a kind of due diligence. No difference if there is any other person. It can be used in other 3 areas also. Corporate restructuring, venture capital, public offering. We have to stick to what they say. We cannot directly go against them. There is no law or standard, AS or accounting standard or India, something like that. Wants to acquire unit of Shraddha Limited about the future viability. About future viability of the unit. You are appointed to investigate economic financial position of the unit. What are the factors you shall consider studying the economic and financial position of the business? So whether there is adequate fixed and working capital, adequate capital is there for doing the business. They are talking about capital sufficient for the growth. What is the trend of the sales and profit in future? What kind of profits are there? What kind of capacity utilization is there? So it's a very general thing, very general thing. So what kind of capital they have? Are they having good enough fixed capital for their fixed assets, for their long-term assets, their working capital for the current assets, what kind of future they have, profit, sales, future growth they are expecting, product-wise, area-wise, profits in past, they will be able to continue profits in future, capacity utilization. First comes capital, then starts production, then comes sales, then come profit. So we are talking about 4 items. You can remember like that. First comes capital, talk about that, then start the production capacity, talk about that, then happen sale, talk about that, then happen profit, talk about that. Time cards. So a company has installed a effluent treatment plant in compliance with pollution control regulation. The authority structure is fair. The authority structure in the company is fairly decentralized, and top management has given considerable leeway to different departments for meeting their manpower requirement. So all the departments decide their manpower requirement. Of late, top management has gone suspicious over the manpower expenditure in section of maintaining. So there's a problem with, they are suspicious whether so much of manpower is required for pollution control equipment. How you can check it? Okay, very easy. You can see attendance record, whether really so many people are working. Very simple, straightforward. You can go for surprise site visit, whether so many people are working. Okay, so 2 things you can do. From these 2 things, you may come to know about the ghost workers. Okay, the number of people attendance are quite low. Number of people there are quite low, or the productivity is quite low as compared to actual work done, quite low as compared to number of employees they are showing on records. So very simple, go for attendance records, go for surprise check, see how much is the output and how many employees they are showing. The output is quite low. This shows number of employees are less. You may come across the ghost workers. Very simple, do these 2 things, you may come across, so 1A, 1B, 2A, 2B. Do 1A, 1B, you may come across these 2 things, 2A, 2B. You may come across ghost workers, you may come across low productivity. In the IMP list, we have only 1 question from the forensic audit. Others are not there, maybe because they have been recently asked. Many of them are not covered because they have been recently asked in the exams. So there is a study material question, guys. This is the last question for the chapter. X Limited is engaged in manufacturing a floor covering. Floor covering has taken product liability insurance, PLI. Such a policy covers risk liability damages. So they are making floor coverings. Such policy covers risk of liabilities. So they have taken an insurance policy that if someone uses our products and if there's a problem, we will take claim from you. The policy is subject to claim series clause. That means all the similar claims will be clubbed together. A claim series event is a series of 2 or more claims arising from one specific common cause which are attributed to same fault in design manufacture. All the claims happening because of one problem will be clubbed together. A claim series is deemed to be one claim under terms and conditions. The company has been asked to shell out damages of 5 crores due to supply of faulty products to one of the vendors. The vendor has sold flooring to 5-star hotel, which has alleged that the harmful chemical used in dyeing of covering result in skill element to some guest. So they sold the floor covers to a vendor. Vendor sold it to the hotel. Hotel faced the problem from the customer. So customer demanded money from hotel. Hotel is demanding money from vendor. Vendor is demanding money from manufacturer. What special issues? You are appointed by the insurance company. You are appointed by the insurance company. You are appointed by the insurance company. What special things you will keep in mind while investigating these things? In claims involving product liability insurance, many documents are required from third parties. The third party may be unwilling to provide relevant documents for forensic accountant concerning the very organization responsible for causing damages. Many documents are required from third parties. Third party may be unwilling to provide relevant documents to forensic accountant concerning the very. So a lot of documents will be required. So we will need documents from hotel. How many, where have you put these coverings? How many people got affected? What problems happened? Their name, their photographs, their medical reports. A lot of documents will be required. So we'll need documents from the customers, from the hotel, from the vendor, from the manufacturer. The independence of forensic accountant become paramount in such type of assignment because involves engagement with parties who are not directly claiming from insurance company. Forensic account needs to resist any pressure or any interference establishing the scope of the assignment or manner in which work is conducted and reported. Lot of parties are going to get involved. So here customers of the hotel are going to involved, hotel is involved, vendor is involved, manufacturer is involved. So many parties are involved and these parties may be connected to accountant in one way or the other. So he is supposed to ensure that there is no pressure or interference in deciding the scope, what is going to check, how is going to check, and establishing scope of the assignment, manner in which work is conducted and reported. The company might be willing to negotiate if it to salvage its reputation. It can lead to additional complexities. Okay. So the company and the hotel guys and people will try to negotiate. Everyone wants to protect the reputation. So they will start negotiating with people. Don't worry, we will give you money. Don't worry about that. But then will insurance company pay that money? So add to the compensation you are paying. Quantification becomes a big challenge. Careful as to the date of loss when the first claim occurred and whether same falls under the policy. See, in the claim series clause, if there is a one root cause because of which everything is happening, so claim series clause will cover, okay, we will cover because of this one thing, clauses which happen within 3 months. So, see, in claim series clause, they say that if the root cause is happening on a particular date, all the things which are happening in 3 months will cover it. It is responsibility of the people, companies to stop that further damage. That's why claim series is there. If it is going beyond that date, you are responsible. So when you go, you will need a lot of documents. That is one point. So first thing I will think that before going there, think about the independence. Okay. Then you start collecting the documents. Then you see that only as per the policy documents, the policy document will say the claim series clause for how much tenure claims will be covered. Only those claims should be there. Then it will be very difficult to quantify, and especially if there are negotiations. You talk about 5 things. You talk about first the independence, many people are involved, so avoid any kind of pressure, interference in the scope, working and reporting. Then many documents will be required. Ask for that. They will need to provide it. It's very important from the customers, from the hotels, from the vendors, from the manufacturer, which batch of products, everything, a lot of information will be required. Then the date of loss is important, which is covered in the claim series clause. Quantification is very good, going to be very, very challenging. Lot of parties, terms and conditions, complex situations, and further they are negotiating. And so whether we will cover the negotiated amount, again there will be a big complexity. So guys, we stop here. Many of the cases were very interesting. All the cases are coming from the study material, new study material. So they become extremely, extremely, extremely important.